Hey traders, checking in on the stock market today. Bulls have had quite the week of complete control. Another day of green out there. Tesla stealing the show yet again. I'm going to go over some things that I've done right and things that I've done wrong over the last couple of weeks. And we'll check in on a couple volatile names with some decent setups to be watching into tomorrow. So we got SPY with a gap up open and a new all-time high, but only by 9 pennies. So we're still considering this a double top. And it will get interesting if we break the low of today tomorrow. 424.62, because that would be a double top and rejection. And then from there, we have to see what does consolidation look like, because it would either be a cup and handle psychology pattern with just a brief pullback looking for a new all-time high, or if we were to reject from that level and see any notable bear follow through, we'd be watching for an equilibrium. And again, that's where our retracement levels help us gauge what is the most likely scenario. Again, that's assuming we reject. We could have another green day. The bulls have had complete control all week, but it would be watching the 50% retracement, knowing that if we pull back and hold the 382, a daily bull flag is likely. If we were to pull back and get down to the 50% retracement, that's when we look for the equilibrium. But first things first, bears have to break 424.62 for that to be a little double top rejection. Otherwise, the bulls had a lot of control today, just some healthy consolidation. So QQQ, this was the rising wedge, and let's look at it on the NASDAQ futures where we've been drawing it. Pretty sure that we're considering this now a bull break. I mean, you can always just tweak that line a little bit to keep it valid. And on this one, it would just be a little bit of an up. But then at that point, we're missing this whole little level there. So either way, I'm just watching the daily higher lows at this point. And that is one thing that I was definitely very wrong about heading into this week, where I was right about looking for the financial sector to bounce on the daily time frame, and I was wrong thinking that that would lead to the inverse relationship between QQQ and XLF remaining, and to see QQQ pull back with that. So no QQQ pullback this week, and this is the kind of style for me where I'm wrong and leaving money on the table. So I'm not wrong and losing money because QQQ is still going up. I'm leaving money on the table by, number one, not being more aggressively bullish on these names this week. But number two, my bias had me sell some names like ARC a little bit early. So with my hedging, what I've been doing, I still have some SPXS and QQQ, but it hasn't done much to move the account. It helped my account stay green last week. It's been a little bit red this week, but been able to day trade and offset that. It pretty much has been a non-event as far as my long positions comparative to my hedge positions. They've been fairly balanced. But selling that ARC position was definitely too early. And again, that's a bit of a bias that I had watching for, and really what it was heading into this week pretty confident. Okay, I know what I'm looking for. And it was starting the first 10 minutes of the week on Monday, where it was big flashing lights. This is exactly what you're looking for. 10 minutes is how long it lasted. But that 10 minutes was enough to throw me off, and it was right here. Monday, XLF bounce follow through, QQQ drop hard. And that, if that didn't happen, I'm very curious to know what would have gone on in my brain for the rest of the start of the week, because that happening affirmed. Again, only 10 minutes, but it affirmed this is what you're looking for. And that led for me to exit my ARC position. And again, that was definitely too early. I don't have any problem with how I scaled out of the position, aside from exiting the rest of it. And that was on Monday, I believe, is when I exited the remainder. So that's one lesson, and that's something that I'm learning, focusing more on swing trading comparative to day trading. Because when I'm day trading, and I'm taking the same setups right now on swing trading that I would on day trading. So the daily time frame for ARC is something that I do on the 5-minute time frame for a day trade. It's way easier for me to sit through these red bars and to let these trends play out when it's taking 20 to 30 minutes, as opposed to taking days where you have an entire red day and you have to just sit through it and just hold and watch that pullback. So again, that's something that I'm learning to get better at, and I'm very pleased with how I'm doing this year overall, but these are just reminders you can still get better, and that's always refreshing. And that's what keeps this game fun and exciting 11 years later. There's always something to get better at. Otherwise, it would get dull and boring. So continuing to work on that, but definitely wrong about the QQQ pullback. And I'm probably just going to be early. We're going to see QQQ weekly consolidation in the near term, in my opinion. But just like I was early looking for the XLF consolidation by 2 weeks, I'm now early looking for growth in QQQ consolidation. So QQQ, upper wick of profit taking today. If we break the low of today, tomorrow, 349.17, just looking for a daily high or low, anything above 340.15. And there's plenty of space for that daily high or low to be set. One of the things that I did do well this week was not going aggressively bearish to end last week, because all of our major sectors did not drop to the lows at the same time, so my aggressive bear switch did not flip. I had a little bit of a bear lean headed into this week, but not enough to get me into trouble. IWM, significant strong close. Resistance is right here at 233.35 and 233.64 before the all-time high right behind it, and it's the financial sector being a lead bull sector today that is helping IWM stay strong. And again, it's just the hourly uptrend and the higher low everyday pattern that is keeping these bulls in control. We have a bank stress test this afternoon or this evening to be watching, and we'll have to see how the sector reacts to that, and that will impact IWM. But if we were to see a gap up open, that's when I look short, because we did not see any hourly consolidation today. I'm much more likely to play a name short on a gap up open if the previous day does not have hourly consolidation. That's one to write down. That's not even something that I've really realized until this very moment, which is why getting out of your head is so very helpful as a trader. And that's whether that's talking with a buddy about it or writing down and journaling in your diary, whatever it is, making YouTube videos, getting out of your head and talking about trading is a big step forward. I can remember when I started doing my own technical analysis and writing 11 years ago in the forum and practicing and trying to just sound like everybody else. Okay, this is what they look at, and that was just such a level up once I started doing that. I suggest everybody do it. XLF, scouting the daily lower high now. So I'd love a gap up open for me to be looking bearish. We've now been bouncing for 4 days. Today we had a very strong day, and we've now bounced 4% from the low. Anything under 38.18 is a daily lower high. I'm watching for a lower high compared to the high of the dump day, 37.41. Daily EMA 12 is now coming into play. We're watching the hourly uptrend as a guide, and we got support at 36.24. So daily consolidation is due, but the bulls have created a lot of space to try and set up that daily high or low and to try and set up the daily trend change back to the bulls. So it all depends on the open. If we get a lower open tomorrow or a higher open tomorrow, what I'm looking to do drastically changes. And again, my style would be, if we gap up, I look to take profit on any quick pullback on a morning short and then just go risk-free. Put my stop over the high of the day. A lot of hand motions today. XLV right off of our upper resistance line on our daily rising wedge. So this is still valid, absolutely. I haven't touched this, and it perfectly rejected off of it after a new all-time high. So if we see a break of 124.99, daily consolidation is underway with the most important support level of 123.20. I'm going to leave this pattern up here for the visual, but this uptrending support line doesn't mean anything to me, and everything and 123.20 means everything to me because that is our price level. It is concrete. There is no subjective interpretation. XLE energy sector, we have the rising wedge here as well. We're right in the middle of it. So no real change here in the short term. If we pull back further, the bulls have to hold the low of 52.35 and 52.29 to form a daily higher low compared to that level. Biotech real tight here and breaking our short-term tight range to test the high 137.72. And if we break 137.72, we look to 138.20 right behind it. And again, this is another name where I am scouting for weekly consolidation, but there is no sign of it at this point. There's an uptrending resistance line to be keeping an eye on and an uptrending support line. It's more of a channel here. But the bulls are keeping their control. And again, there is no sign of the weekly consolidation that I was looking for this week. It just means I'm too early. Semiconductors. So testing our high for SMH, 255.89. And if we break that level, the weekly equilibrium will be a bull flag. And again, it is cup and handle psychology. It's not a cup and handle, but we pulled back, we failed to break resistance, and then we formed a quick little bull flag. So 255.89, key level, and then 257.54 is the short-term level, I should say mid-term level. And if we reject from 255.89, we'll watch to see if the bulls can form a higher low compared to 244.96. So the bottom line is bulls have a lot of space to work with where we can form a couple red days from here and still be looking for daily higher lows on a lot of names like SPY, like QQQ, etc. Solar sector tan, looking a little bit toppy for some consolidation, just an indecision candle, and an indecision candle at the top of an uptrend is a potential reversal candle. So if we break 84.11, key daily support will be 80.38, and anything above that will be a daily higher low. But again, weekly time frame, nope, I keep mixing tan with other growth names that haven't seen any weekly consolidation while tan has. It's definitely a different setup than names like ARC or XBI or NIO. Nice save by the NIO bulls. I'm watching it for a head and shoulders. And today might have been that right shoulder forming. Left shoulder, head, right shoulder. Why am I looking for a bearish reversal pattern in a daily uptrend? Because the bigger picture, most likely scenario is weekly consolidation. Just a question of when. So, if I want to be an aggressive swinging bear, if we break 45.24 tomorrow, I can short it. I can put my stop over 46.59, and I need a break of 43.81 and 43.77 to prove me right. And if we break this high, that's me being wrong, saying, nope, that is not our daily lower high, because that has to be our daily lower high if we're going to confirm a daily downtrend into weekly consolidation. NIO bears are positioned well for any QQQ daily consolidation to take this price back down to this double bottom on our daily higher low. So that's one thing I'm watching closely for tomorrow. MSOS, beautiful follow through. So again, historical RSI levels, I can't tell you how many times I have placed trades in large part, it's not the only thing I'm looking at, but in large part by historical RSI levels. And I'm just thinking back to the Canadian MJ sector. I've done it so many times on CGC oversold bounces. The dollar just showed us daily consolidation was likely to start this week because of historical RSI. But just looking at MSOS, the last two times, the daily RSI hit 30 after notable bearish control every day. Just bears in control, we bounce. So I believe it was Monday. This was another one of the good things I did this week was entering an MSOS position because that's now up 5%, and that has significantly helped offset my hedge SPXS and SQQQ positions. I think I'm throwing an extra Q in there every time now. It's probably locked into my brain muscle memory. So what we need to see on MSOS once we top out, and this is what aggressive bulls will be looking for, we top out, need the daily higher low, and then the confirmed trend change. Look at the last two times we've hit daily oversold. Big bounce, no trend change. Big bounce, higher low, no trend change, nothing. So this time will be different if we see a confirmed trend change once we top out on this move. And the most important resistance for me is 42.06. And the monthly looks just fine. Look at those lower wicks. Bulls took their sweet time showing up with the broader market, and broader market weakness could derail what is just starting to try and be a longer term shift. But in the absence of broader market weakness, let's see if third time's the charm as far as oversold bounces leading to the daily trend change. The daily trend change is essential. The VIX dropping to lower lows, lower wicks, but still weak overall. Hourly, looks like we had a little trend change in there today. So if we get a bounce, anything under 2182 will just be a daily lower high on a bounce. So that's the most important level that we're watching. And again, on any broader market consolidation, which is definitely due after how strong the bulls have been all week, we're watching. Are all sectors dropping together? Are some sectors staying strong while others consolidate? That's going to give us some good info. The dollar, trying for the daily bull flag. We need a bull break of 91.906 to confirm the daily higher low is set. And then we're looking back at 92.41 resistance. And with that, the metals are staying bear flags. Gold is right on top of 4-hour support. It is technically still a 4-hour equilibrium. And we're going to get a break of this equilibrium either tonight or tomorrow before the weekend, most likely. And I'm just looking at this pattern of just tighter and no break yet. And the dollar, if this is going to break bull with any follow through, the dollar is going to have to fail any kind of bounce and see another leg down of consolidation. And silver's the same thing, just 4-hour lower highs on the bounce attempts, and the daily chart is still a bear flag possible. It's a bear flag for both of them. The bulls have to show us that it's not. That's the daily for silver. So miners, daily inside bar, it's a daily bear flag unless bulls prove otherwise. Oil. Daily is extremely strong. So we lost the 4-hour EMA 12. No bear follow through. Daily EMA 12 is support, and anything above 69.54 is a daily high or low. And with that, natural gas bull break. Nice volume, nice increase to the upside. Following through with the weekly cup and handle after the daily cup and handle. And now, limited resistance. So 3429. Next level is 3436. And then 374 after that. I can remember looking at this chart back here and saying, remember this for a longer term momentum shift. I'm going to have to go back. That's a good thing about all these YouTube videos. I can just go back and look at, what was I looking at on natural gas back at the end of July 2020? Did I see a momentum shift taking place? Was I bearish? Did it catch me by surprise? That's a nice review to have as well. Although I certainly don't have any time to go back and watch old videos. Someone do it for me. So, speaking of cup and handles, Wish. So I know tomorrow Wish is going to have good volatility. This is a daily cup and handle setup. I have a tiny swing position just from an end of the day bull trade. And it's a failure to break 15, daily bull flag, and a strong close. And after hours, the bulls are making a move here. We're up in the 1460s. And if we break 1450, we're looking at 15, 1545. And then bulls have a lot of momentum behind them if they can clear 15. So 15 is a very key level to be watching tomorrow. And I am curious to see if the bulls can follow through. They need to show up with that volume. They certainly bought the dip very significantly today. Today was a day where I traded the first half of the day and then left the computer. And it's so frustrating as a day trader to do that because I had Wish down here, played this oversold bounce. And really, what happened was I chose the wrong one to let ride. So one trade was Wish, played this oversold bounce, and sold into the 5-minute lower high. Just because I said, all right, I'm about to leave the computer for over 2 hours. The bears have complete control, bigger picture. Wouldn't be surprised for some more bounce follow through, but I'm just locking this in, having my day maker, and ending the day with the count at all-time highs is essentially just what I wanted to do. So left money on the table by not just putting a stop under the low of the day and letting that one play out. And of course, the one that I did place a stop and let play out was an ARC short. So I looked at ARC this morning, and ARC's moving up big time the last 2 days because of Tesla. But I saw the 4-hour RSI was just through the roof at 87 4-hour RSI. The hourly RSI was 88. And I just said, all right, enough's enough. I am top fishing resistance. So we were trading right here at this point in time, and there was no resistance. I was just top fishing saying, we're due for a pullback, and I want a piece of that. So I entered bearish 126.50s, put a stop at 127.01, had a plan of exiting half on 15-minute consolidation, but that consolidation was very brief. Look at these holds of 126.37, 37, 38, 34, 36, 32. The bulls would just not give up these 30s. So as soon as I saw that, I exited half of my position, not as low as I wanted to, so I wasn't risk-free. I had much less risk now. My break-even was 126.60s, and I had half the position size. Placed my stop 127.01, and this is exactly the move that I was looking for, but I was away from the computer, stopped out, and missed a really nice bear play. So chose to let the wrong one ride, essentially. So those were some losing trades. One more losing trade I had today. Not necessarily, actually the first one wasn't a losing trade, just money left on the table. TLRY. So again, this is my style. And I do this day trading all the time, but I can do this on the daily time frame, swing trading as well. And it was an initial solid bull move, a 2-minute higher low, and I top fished the high of the day. So at 18.20, I shorted. I put my stop at 18.31, anticipating a 2-minute lower high was the most likely scenario, and then anticipating an equilibrium. So on the pullback, I exit half of my position, 10 cents lower. My break even is now 18.30. I put my stop at 18.31 just to be 1 penny above that psychological level of 18.30, because that size of a loss means absolutely nothing. And bulls win. And we had another member who took the exact opposite trade. And they played off of 18, sold partial, and then put their stop in, and they got the bull break and the win. So, again, wrong, no biggie whatsoever. So being wrong and having tiny risk by selling partial positions, I was able to day trade to a day maker today by a member tagged me asking a question about CLOV. And I appreciate the shout out. They were asking, is this a valid falling wedge? And the discussion was, there's bear follow through. So a falling wedge by definition is bear breaks with a lack of follow through. And the discussion was saying, well, these are getting follow through on these bear breaks. And that is the case. That is solid follow through, absolutely. But it's also relative to the ticker, because 1 or 2% of follow through on Apple is huge follow through, but 1 or 2% on CLOV, a ticker that moves 10 to 20% a day, is much less notable. But for me, they tagged me and asked me that question. I said, I put this support line up, and that support line was enough for me to say, yeah, that's valid to be paying attention to. And it was right here. I said, okay, 2-minute bounce. And I'm watching, and I have a market order filled out. And what else I'm looking for is, why am I looking for a bounce aside from the fact that we're extended to the downside, is the hourly was still in an uptrend. So anything above 13.31 was an hourly high or low, and here we are above that level. And we had a very similar setup. Well, I don't want to confuse it here. Probably another ticker. Sometimes my mind just overlaps. There's a library of charts in there, and sometimes it pulls up the wrong file. So CLOV, looking for an hourly high or low. 2-minute, definitely extended, clear support line to be watching. So I have a market order filled out, and I've got my thumb, my pointer finger right over the mouse. And I'm watching this test at 13.54. And I'm going to enter on 2 scenarios. First scenario, 13.54 holds, and we start to bounce. I enter, put my stop under the low. Second scenario, 13.54 breaks with no follow through. I enter and put my stop at an acceptable level. I'm not going to use just the right under the low, because by definition, the falling wedge breaks support right into a bounce. If you're trying to play a falling wedge and you're putting your stop level right under support, you get stopped out at the bottom. So as soon as that happened, saw it, and then I saw the bounce start, market order filled at 13.545. We'll call it 13.55. Stop goes 13.39 to give wiggle room. I then watch this bounce, and I'm watching this downtrending resistance and 13.73 resistance. So after a 10-cent bounce, I take half of my profit. My break even is now 13.45, and I wait a little bit. And as soon as we break 13.73, I say, okay, that's it. The wedge broke bull, so I'm no longer giving that wiggle room. My stop is going right under 13.50. So 13.49 is now my stop, and I have no risk on the trade. And it plays out. We get bounce follow through. And this was another one where I exited before leaving the house for a couple hours, and I exited, I believe it was 13.89. Other trades today. MSOS swing was great, but no day trading there. I did short Tesla right at the open. I missed the long. So the short was great. Just a quick little win. Gap up open and shorted. I could see, let's look on the 15-second time frame, because I wasn't watching the 15-second chart, but I was watching the bid and the ask. And I was watching 675 hold to start the morning a few times. And I said, all right, if that level breaks, I'm short. And you can't even see it. You know, if we had a 5-second chart, you would see it. Do we? We're watching the 1-second chart. Again, I wasn't looking at this on a chart, but it shows you the bid and the ask. You can see, you know, I can see clear support and resistance being pinged second by second. It's a lot of seconds in the day. Bear with me. Never looked at a 1-second chart before. There's definitely a better way to do this. I just don't know how. And then the play after the short would have been longing 5-minute oversold. But I was a bit too slow for that. And here it is. So here's the open. And I'm just staring at the bid and the ask. Open. So we hit 675 and hold it. 675 and hold it. 675 and hold it. New high of the day. 675, hold it, hold it, hold it. And I'm just watching. Ping, ping, ping. And as soon as it breaks, I'm short. And it was, again, just me market order. I could have triggered, I didn't even have the time, but, you know, triggered a stop short as soon as that level broke. But I just market ordered it as soon as it broke. And then we got a pullback of, you know, a solid 1%. And that happened very quickly in the first 2 minutes of trading. So I just took that scalp win. I probably got a 0.5% out of it. And that started the day with probably a half-day maker. And again, I missed the 5-minute oversold. So gap up profit taking, not surprising. 5-minute oversold bounce. And then the new high of the day. And then bulls kept their complete control for the next few hours. So that was a quick little win there. I had another bunch of trades. Really how I started this morning. I think I went 5 for 5 with one break even. I can't even remember all the trades. But it was just quarter maker, third of a day maker, quarter maker, third of the day maker. Just these little wins, stack them up, and scalping. Just real quick. No trade lasting more than 5 minutes in the first half hour of the trading day. And that's not something I do very often, because if I'm live streaming, I can't trade like that. It takes way too much attention. And I can't be in my flow zone while live streaming and focused on everything bigger picture. All right, I'm done talking. Thanks for bearing with me. I hope you all have a good Friday. Let's see what Wish does. We're up at the high of after hours here. It's going to have a lot of volatility tomorrow, that's for sure. And we'll see if there's any signs. Looks like XLF, bullish reaction to our bank stress test. Give me that gap up and I'll be looking short for the daily lower high on the bounce. Do good things.
Some people would kill these Japanese beetles because they're pests and eat leaves in the garden. I say, have a good time having sex on the berry.
Hey traders, checking in on the stock market today. Bulls have had quite the week this week, in control almost every day, probably every day.